The Canada Pension Plan, CPP, is a monthly social insurance payment for retired Canadians. The amount you receive is based on your average earnings, CPP contributions, and age. The Canada Pension Plan, CPP, is a social insurance benefit program designed to help supplement people's income during retirement. It is intended to replace about 1/4 to 1/3 of a person's average employment earnings. This monthly taxable benefit is available to all Canadians, including self-employed people over the age of 60 who have worked in any province or territory outside of Quebec and have contributed to the plan. Payment into CPP is mandatory. In January 2025, the maximum monthly amount for new CPP recipients at age 65 was $1,133. In October 2024, the average monthly payment paid for a new 65-year-old CPP beneficiary was $808.49, contributing to the CPP in general. All Canadian workers, aside from those in Quebec, over the age of 18 who make more than $3,500 annually, are required to contribute a percentage of their employment income to the CPP. This percentage is set by the government each year and is known as the contribution rate. For 2024, the employer and employee contribution rates are each 5.95%. You'll make contributions based on the amount between $3,500 and the earnings ceiling, an amount set each year based on average wages that is also known as maximum pensionable earnings. For 2024, the maximum pensionable earnings amount is $68,500. This CPP table outlines the contribution rates and maximum pensionable earnings each year. If you work for an employer, you pay the employee contribution, typically in small amounts deducted from each paycheck. Your employer pays the same amount as their portion. If you're self-employed, you pay both the employer and employee contribution amounts, since you don't have an employer to cover half of the contribution. The self-employed contribution is calculated as a percentage of your net business income, up to the maximum pensionable earnings cut-off. For example, in 2024, an employed person and their employer would each contribute a maximum amount of $3,167.50. A self-employed person would have to contribute a maximum of $7,735. As of January 1, 2024, there's also an additional CPP contribution known as CPP2, which applies to earnings above the annual maximum pensionable earnings threshold, up to a second threshold called the additional maximum pensionable earning. For 2024, employers and employees each contribute 4% of earnings over $73,200, up to a maximum of 188 years. Self-employed people will contribute both portions for a maximum of $376. CPP2 is part of the CPP Enhancement, which will increase the amounts of future CPP payments. Keep reading for more info on the enhancement. You stop contributing to the Canada Pension Plan once you retire from work or turn 70. If you are between 65 and 70 and still working while receiving CPP benefits, you can also elect to stop contributing to the CPP. Applying for CPP benefits. CPP payments don't arrive automatically once you turn 60. To receive CPP, you must apply for. Though the standard age to begin receiving CPP is 65, you can start receiving benefits as early as 60 or as late as 70. The monthly amount you can receive maxes out at that point. If you have ever been denied a CPP benefit, you live outside of Canada, or have a power of attorney that oversees your CPP account, you must apply for CPP by submitting a paper application form. Otherwise, you can apply online via My Service Canada account. Once you submit your application, you'll get an estimate of your monthly benefits. You should hear back within 120 days after submitting a paper application.